Is Bitcoin too expensive right now? What if the price crashes right after we buy? And what if it keeps going up and we miss out? This fear stops many beginners from ever getting started. So today, we're explaining dollar cost averaging, or DCA, a simple Bitcoin strategy designed for beginners. Dollar cost averaging means buying Bitcoin regularly with the same small amount, no matter if the price is high or low. Instead of trying to time the market, we buy a little Bitcoin every week or every month. For example, we buy $50 worth of Bitcoin every month. Sometimes we buy at a high price. Sometimes we buy at a low price. Over time, those prices average out. DCA removes stress. We don't need to predict crashes, watch charts all day, guess the perfect moment to buy. It turns Bitcoin into a habit, not a gamble. That's why many long-term Bitcoin holders prefer DCA, especially beginners. Trying to time the market means waiting for the perfect price. But here's the problem. No one knows the future. Many people wait, and never buy at all. With DCA, we stop guessing and start participating. No strategy is risk-free. Bitcoin is still volatile. Prices go up and down. But DCA helps reduce emotional mistakes, like panic buying or panic selling. It's about long-term thinking, not quick wins. Dollar cost averaging is not about getting rich fast. It's about staying consistent. Instead of asking, is now the perfect time to buy? We ask, can we stick to our plan? If we're new to Bitcoin, DCA is one of the simplest ways to get started. In the next videos, we'll continue breaking Bitcoin down, step by step.